Assalamu alaikum. So let's start with financial accounting, the accounting cycle. So in this topic, we will learn about the accounting system number one, and then we will learn the double entry bookkeeping. So what is the accounting system? So the accounting system is a system of collecting, storing, and processing financial information and accounting data used by managers. So this is the definition. If we see that the accounting system is used to collect data, store, and then process the financial information, and that data is used by the managers in the business. So moving on to the double entry bookkeeping. So what does double entry means? In accounting, we will learn that there is a debit and there is a credit. Like for every debit, there must be a corresponding credit entry. And same like this, for every credit, there must be a corresponding debit entry. So this means that all transactions have a dual aspect. So it means that if there is, for example, a debit of 100, so there must be a credit of 100. So this will close the transaction, which means that the entries should balance. Now moving on to the accounting equation. So what is the accounting equation? It is assets equals to capital less liabilities. So in every company, there are assets, there is a capital which is invested to start the business, share capital, which we say, and then there are liabilities. So we can write this equation in any format. For example, we can write it as capital equals to assets minus liabilities, and we can write it as liabilities equals to assets minus capital. So if you can see that from this one equation, assets equals to capital plus liability, we have turned around the equation. So these three things will make your balance sheet. Which we say statement of financial position. We will learn about it while solving the questions. So what does assets mean? So asset is something which is owned by slash owed to a business. For example, cash, receivables, property, plant and equipment, intangible assets, goodwill. Uh, so these were some examples of assets we will look later onwards. Then capital. So capital is the initial amount of money which is invested in the business by the owners. Thereafter, it is adjusted accordingly with the movements in the profit and loss, less any drawings plus any capital plus any additional capital contributed. So we can say that this is a net amount which the business owes to the owner, and liabilities like the opposite of assets. If we see, okay, I will write it down, the amount of money owing to people outside the business for the use of their resources. So these were the basic definitions of things in the accounting equation. Moving on, let's describe the functions of the books of prime entry. So we can make it this our heading, books of prime entry. See, we learned that there is a double entry bookkeeping system. Okay, so in order to record the transactions, to record the transactions, we will need the books of prime entry. Examples such as purchase, purchases journal. So what do you mean by the purchases journal? Think of it as you are running a business. So you are running a business. You need inventory. Example, raw material. So you are running a manufacturing business. For example, manufacturing anything like, for example, making a soap. So you would need inventory. Example, raw material to make the soap. So you would purchase it from a supplier. So you will record all the purchases which are made for the business in this book. So whenever you will make a purchase, you will get an invoice from the supplier, which is an evidence of the purchase made. Then there is a purchases return journal. So this book is used to record all the purchases returns which are made for the business in this book. For example, for example, you purchased an item which was defective. So you requested your supplier, according to the terms and conditions, or we say as per the terms and conditions. So you will make a purchase return. Sir, we know what is a purchases journal and what is a purchases return journal. So, sir, you haven't told us how to make the corresponding entry. So, we will learn about the entries for both of them. Whenever you make a purchase, so debit purchases, and if you are purchasing via cash or you are purchasing it on credit or you are mm, offering something else in return, which you will learn later onwards. But for up till now, keep up till cash or credit. So the entry for purchases return would be the opposite of it. So you had debited the purchases. So here you would credit purchase return and debit cash, or if you had made purchases on credit, so receivable